Hello everybody, my name is Paul Buitink and today I'm going to have a conversation with Ulrich Bindseil, Director General Market Operations at the European Central Bank. We will discuss the introduction of the digital euro, a central bank digital currency. Hi Ulrich, thanks a lot for making some time available for me today.
Hi, Paul. Yeah, thanks. Pleasure.
So first of all, what is the digital euro project of the ECB all about?
Well, a digital euro is, as we mean it in the context of our work, is central bank money available to everyone. Now everybody can use banknotes. Everybody in the world basically can hold a euro banknote. A digital euro would be, a digital form of central bank money. So you have it on your device in a wallet somewhere, stored electronically, and you could also use it. And then, of course, what it is exactly depends on the functional scope that you give to it. So is it more kind of account which you can use for credit transfers, or is it just, really a wallet, something close to a banknote, which, circulates and is held by a bearer, and not really, an account associated with a name. All those things are being discussed, and there are no conclusions yet on those. But it is, you could say, on moving with time, moving with digitalization of society, and recognizing that the trend goes to electronic payments, and that if we believe that for citizens and firms having the option to also pay in central bank money, not to crowd out private payments, but as a complement, as an alternative, as it is the case now with banknotes. And if we want to maintain that in the future, then it's natural to also check, if we want to move into this business and offer this opportunity to citizens and firms.
Yeah, because I read your paper from last year, January, about tiered central bank digital currencies. And in that paper, you wrote that they could especially be useful in countries where people lack access to commercial banks. Is that also the case in the Eurozone?
Yeah, no, certainly that's not the main motive, you could say, in the Eurozone. I mean, this paper starts with a general review, of all arguments, and it was not specific to the euro, to the ECB. And yeah, indeed, if you have a country with a few banks or few bank accounts, but everybody has a mobile phone, let's say, and you have those type of countries, then you could say, yeah, a digital euro makes sense from the perspective of deploying electronic payments to everyone, and then why not directly through a central bank money. But in the euro area, I would say the non-banked, I mean, they're still non-banked, but I think this may correlate in Europe quite a bit with those who maybe don't have a mobile, maybe old people. It's unevenly distributed across the euro area, the unbanked, but it's a relatively modest amount. And in our report we published in October last year, we also say financial inclusion is an objective, but to be explored, because you may likely have to try to include people in electronic payments who don't have a mobile phone or who don't have maybe a recent mobile phone. So I think you're running. It's less obvious than in a country, like, I don't know, some developing country where people have mobiles but no banks.
Yeah. And is there a proven demand for this currency? Have you noticed amongst citizens that there is a strong demand for central bank digital currency in the euro area?
Yeah, that's how to find that out? That's a good question. I mean, of course, we have statistical evidence that electronic payments, grow their market share compared to cash payments. So we just published a report called Space Report, which one can find on our website, which shows, those trends in payment behavior and the continuation of this trend. I think 2019 was the first year where at the point of sale, the share of electronic payments in value terms was higher than the cash payments. And I mean, overall, the euro area is not the most advanced place in the world on this. We are not like Sweden, or within the euro area, you know, the Netherlands is more advanced than the big countries. So it's a bit of a mix, but everywhere there's the same trend. And we have seen in those countries which are more advanced that the trend can accelerate at some stage. Yeah. So no question, there's demand for electronic payments. Of course, then you can still ask, but okay, are people not happy with private solutions?
Exactly.
Why do you need to enter this market? And here I would make maybe 2 points. First, you know, the payment solution business is one with strong economies of scale, no? So you always end up with few players with market power. And, you know, as long as you can fall back also on public sector money, I think it's fine, you know, somehow you can contain the possible misuse of market power by a dominant player or very few dominant players. But imagine a world where, you know, central bank money is no longer an option, like it is in e-commerce, and, you know, we are all moving in this direction, where at the end you could have very few players. So there, I think it's a better place if maybe you have as a fallback solution basic payment functionality from a central bank being provided directly, like banknotes today. And in addition, in the euro area, we have the fact that those very successful players who extended market share and who have already market power and may get even more market power are international firms. Yeah, so I mean, very good companies which, you know, deliver, of course, value added, like the international credit card schemes or PayPal or but they're all non-European firms. So then also you can ask yourself, do you want such a dominance of international players? Of course, we want competition. We want them. They provide services. I think they consumers like them. So perfect to have them. But the market power they, let's say, accumulate relative to the European players maybe puts us in an uncomfortable, let's say, strategic situation. And the word of you know, monetary autonomy, payments autonomy has been used, or sovereignty. That, you know, we may say we want European private sector solutions to, you know, get a bit into back to business, not lose market share, regain market share, and we want maybe also a fallback solution from the central bank side. Yeah.
So we've seen a lot of power, of course, in big tech American firms, with, for example, Twitter removing Donald Trump's account. So you could argue that big tech is becoming more powerful every day. Also, when it comes to payments, for example, Facebook with their initiative DM, formerly known as Libra. So you're saying there's a geopolitical motive for the ECB to come up with an alternative, so we're not completely dependent on those big commercial firms.
Yeah. I mean, removing Donald Trump, I don't know if I would have given this example, because I think that's more a burden, you know, to take those decisions for those firms than a pleasure, you know, in exerting power. But anyway, no, I mean, you mentioned big tech, and I mean, you could say even the trends we have seen in last years, where big techs are now entering, like Apple Pay, you know, they enter, they are forceful, but the trend of the last years, you could imagine it without them. And this trend was strong enough, you know. So even if you extrapolate that, you could make the case for digital euro. Now, in addition, you have those big names like you mentioned, DM, planning to enter the market. So this, you know, you would say this just accelerates likely further the trend if it happens. So maybe it's a reason to take it more seriously, to hurry a bit up the decision whether to launch a project on digital euro, because that has some lead time, of course, to deliver.
Yeah, and do you worry more about the rise of big tech solutions, or possibly the threat of Chinese initiative, the digital currency, electronic payment, central bank digital currency, which is of course already being rolled out in China and piloted recently in Shenzhen? Which trend is more on the radar of the ECB?
Well, it's, I mean, all those trends somehow matter. I mean, in terms of, becoming relevant as a domestic retail payment solution, I would have seen those big tech companies to be more relevant. I think the role of CBDC issued elsewhere and then used, in another country or currency area is one that has been put on the agenda of the G20. And I don't think central banks, expect this to be dealt with in a non-cooperative manner because, we are all sitting in the same boat there. If the major currency areas all go, start issuing CBDC, then that has a potential, of course, to change international capital flows. And I think it's in the interest of everyone to sort this out in a framework that is agreeable to everyone before you move into cross-border international usage. I mean, there's also the point, again, in G20 work that CBDC can contribute positively to cross-border payments, more efficient cross-border payments. So on one side, one would say, yes, CBDC, let's have a way to use it internationally. But at the same time, everybody sees the importance of rules of the game. And I don't think anyone wants to move aggressively and non-cooperatively into this space.
And would you also be favor of non-euro residents being able to open an account with the ECB?
Yeah, that's exactly then one question that should be decided at the end in the context of what is being agreed. I would say in principle, just thinking now theoretically, why not, the ability to hold a foreign CBDC in the same way as you can now hold any banknotes. I can make a big collection at home of all sorts of global currencies. The difference being, of course, that storing banknotes is, there are some counter incentives to do it in big quantities. While for CBDC, you could see very fast flows, from one into the other, and that's why it's more important to have rules there. And I would imagine, that you need some counter incentives of the rest of the world to hold your CBDC as an investment, or at least, it should not be a super attractive investment. You want, if you want to avoid that the Eurosystem balance sheet occasionally, balloons to 10 times what it is now, and it's already big, then you better, have some maybe monetary disincentives against the entire world, investing in any international CBDC. And my intuition would be that you could do it via interest rates, that you say international or non-residents, can hold it because it's, maybe good for international payments. But the remuneration would be currently, as an example, maybe minus 100 basis points, because a risk-free AAA, short-term government bond has a yield of minus 60 or minus 70. So if you want to keep the stance of monetary policy unchanged, don't bring, CBDC available to everyone internationally without quantity limits in an area close to that remuneration. You need a kind of extra spread. Otherwise, you will see bigger flows and you will see interest rates move and you will see our balance sheet balloon, etc., all things you don't want.
Yeah, so if I would summarize that in layman terms, as a tourist, for example, you would be able to get some digital euro credits, but they would expire because of the negative interest rate that would be charged. And so in that sense, it's not a store of value. It would be a means of payment if I just use the traditional money functions, but it would not really function as a great store of value for foreigners in this case.
Yeah, I would maybe store of value. You would say money should always have a store of value, but not, I would say, not an investment. Yeah. So let's say the Chinese tourist who comes to Amsterdam for 1 week, let's say, can, at the airport, he or she can get a card with some, I don't know, 1,000, 2,000 digital euro. whatever, the person wants to put in it, and it's remunerated at minus 100 basis points. And for 1 week, that's no problem at all. So it's a store of value because he gets it at the beginning and over the week, spends the money, but it's not an investment because, it's not an attractive investment, even if the minus 100 base points over 1 week is nothing, it's a very small fee for this card.
True,
So
but
that's
would the
how I would
Chinese
imagine.
tourist then have to register himself or herself completely with KYC, or would it also be possible to obtain a bearer instrument, like the Oyster card example you use in your paper, or is that still a topic for debate within the ECB?
No, it's of course a topic for debate because those are very important, but very, there are many such details where you have to get it right. You refer to KYC, and of course the digital euro will have to apply the rules, the laws on anti-money laundering and tax evasion, all those things as they apply to electronic payments will also have to apply to a digital euro. Therefore, normally, you need some identity management, no? Of course, as you say, the Oyster card, you don't need it. There could be special purpose cards, digital euro cards, where you don't need it because the amounts are limited, or you just have a range of usages where you can exclude, misuse in any form. So I would say, again, the Chinese tourist who may spend a week and may want to spend, a few €1,000, I think it's and it's, let's say, unconstrained. I would say it's more natural that it's already some sort of registration in my view. But definitely those things have not been really discussed, and
No.
but they
But
have
if
been
you talk about
identified.
the old people, for example, the use case of the old people that are currently unbanked or not, or maybe not unbanked, but at least they're not very comfortable with a smartphone, and they use cash now, for example. If you want to come up with something that's an equivalent of cash, it must also be something that's that easy to use without having to register themselves. Because if you force them to register themselves and they cannot go to a branch office because they're closed and they have to do it online after all, we're not solving the problem for the elderly, let alone the refugee or the homeless people. Or so in that sense, you kind of have to also come up with a bearer equivalent in order to solve that use case for those people, I would say.
Yeah. One important point in that context is that the ECB is committed to continue issuing cash and to support the usability of cash. Yeah. So we are not talking about the more dramatic situation from this perspective that we want really to substitute cash. We are fed up with cash. I mean, the contrary, there's full commitment to maintain cash usable. So we want to add a service to citizens. We don't want to take anything away, really. This being said, yes, we also want to try then to support inclusion to get those people, on board for digital payments. And then you may need a device, or you may need a card maybe with a display, or that's again, it's a more tricky questions, and it will be more costly also to find solutions. And in particular, if the people are unbanked, then you have to do, either you have to limit it to small amounts, or you have to do the KYC, etc. So it's tricky, but it's on the list of things.
Nice. And how would it work on a balance sheet of the ECB? So if these units are created, what will we see on the asset side in return?
I mean, currently, you have monetary liabilities, which take the form of banknotes and reserves of banks, and you have all sorts of assets, and the assets are not strictly earmarked. There's a big framework for monetary income sharing, where you basically, because in central bank Eurosystem, central bank balance sheets, you have in principle the part associated to the issuance of the monetary base, where the income is shared according to capital key, and the rest which is not shared. But as there's no one-to-one earmarking of assets and monetary liabilities, there are some formulas, used, it's a big topic on its own, and I'm not an expert. But I would say nothing changes with the digital euro. I mean, you just have a third form of monetary base. So, we would not want the monetary base to become much, much bigger by that through appropriate incentives. Maybe it becomes a bit bigger, yeah, maybe. But there's no direct matching of asset and liabilities, and there will not be then either, yeah.
But how would they come about then? How would be if I want to start using them and I have now a deposit at a commercial bank and I want to exchange that for central bank money, the digital euro? How would that then work, and what would be then the change in the balance sheet of the ECB?
Yeah. No. I mean, that's, again, I would say the fundamental logic is not different from banknotes. So in the case of banknotes, you go to an ATM, you withdraw them. In the case of digital euro, you would have, one way would be online. You go to your bank account and you transfer from the bank account to your digital euro account. So one account is debited, one is credited, and then you have a counterbalancing change of the position between the bank and the central bank.
Right.
And of course, if there are big volumes flowing like this, then the central bank balance sheet size increases. And in the current situation, what would happen? It would not increase. In the current situation, first, excess reserves on the liability side of the central bank would shrink, no? So there would be a liability substitution. Once all the excess liquidity is absorbed, then the banks would take more recourse to central bank credit operations.
Right, and that will be the future. Then, if it becomes too successful, then banks will just substitute the funding they would now get from depositors for funding they would receive from the central bank.
Exactly, unless the central bank says, I don't want that the banks become more dependent on central bank credit, so I will lengthen my asset side through outright purchases. Yeah, and that would again, decrease the dependence of banks on central bank credit. But if you follow the entire flows of funds in the system of financial accounts, then you will discover that it still requires then banks to substitute the lost funding in terms of deposits through no longer central bank credit, but then you have to access capital markets. You have to issue a bond to get this money back, basically, which is a more expensive source of funding than sight deposits. So that would put some pressure on total bank funding costs, and you would have an effect on transmission of monetary policy, because bank lending rates should also increase. And but again, that's the scenario we don't want really to see.
Yeah. So apart from privacy, which we already tackled, another potential problem that people have with this is that it would also possibly lead to negative interest rates. We already discussed the Chinese tourist, but I think a lot of people worry that it will be used as a policy instrument, and people will have to suffer financial repression or negative interest rates. What would you say to those people?
I would say that's a fear that is not necessary, because the commitment to continue issue banknotes without time limitation, ensures there's no change in the ability of the central bank to impose negative rates, or to impose even more negative rates, for sure. I mean, there's more the opposite worry, that if you offer CBDC unlimitedly at 0%, then you end immediately the ability to conduct negative interest rate policies in the limited range that you can do it now. Because it's like, now the negative market rate is achieved by offering a deposit facility to banks at minus 50 basis points and keeping banks in excess liquidity. Yeah. So that pushes market rates to minus 50 or wherever. If you say, now I offer CBDC at 0 without limitation, you offer a deposit facility at 0. So if you have a deposit facility at 0 and one at minus 50, the minus 50 is gone. No, you end up at zero, and that's it. So the necessity to impose on large holdings negative rates comes only from the fact that you don't want to undermine your current stance, but certainly not, it gives you in no way an extra tool to go negative. Yeah.
Yeah. So if I understand correctly, the small accounts, so consumers, households, small companies up to a certain level, they would just be able to make use of it without negative interest rates. But the larger holders, as well as tourists and foreigners, would potentially have to incur negative interest rates on their accounts.
Exactly. Yeah. So in a paper a short paper with Fabio Panetta in Vox EU, we say why not, just as an example, imagine every citizen can hold 3,000 euro at conditions never worse than banknotes in terms of remuneration, so never worse than 0%. And 3,000, is a lot for payment purposes, and it's more or less what we hold on average as banknotes. I mean, I don't hold 3,000 euro as banknotes. Maybe, I don't know about you, but
No
the
comment.
average, some people seem to hold a bigger stock so that the average is 3,000. So if we say the same number, can be held as CBDC at 0% at current levels of rates, and maybe if one day the interest rate level is normalized, let's say one day we have again that short-term nominal interest rates are at 4%, like it was normal for many decades, then you could imagine that this tier 1 interest rate on deposits up to 3,000 could be positive also, no? It could be 1 or 2% positive. But at the moment, I guess it would be zero, and bigger amounts would have to be negative just to discourage the use as investment and the undermining of negative interest rates and the flows of funds, into the central bank balance sheet in huge amounts.
And is it a smart plan to give the ECB even more power? Because you could also argue that in the run-up to the great financial crisis, the ECB let a credit boom run wild in South Europe and in Ireland, and so the ECB has grown even bigger afterwards with all the emergency programs. Does it make sense in that perspective that to give ECB even more powers as a bank?
I don't know. I mean, I don't think we are driven by the desire to have more power. I think more the opposite. And so why do you say more power? I mean, because it gives us another instrument we can play on, or
exactly.
we are. I mean, the idea is that we offer a service that to citizens that in a world which is digitalizing, keeps the offer of central bank money usage for everyone. So if you don't, or if people want to use banknotes less and less, it's first of all, a retreat of the central bank. No, so maybe offering CBDC is just to maintain the usability of central bank money for citizens, and from that perspective, not an expansion, but just a modernization. And then I would say on the interest rate setting, if CBDC is remunerated, I mean, that's not, an instrument of power or whatever. It is, I would say, I would view it as being derived from, some spread logic, in the same way as you now have a certain logic between the main refinancing operation rate, the deposit facility rate, the margin lending rate. You don't use them in a very fancy way to exert power or not even to exert clever monetary policy, but you just feel, if I need an end of day overnight credit, I should pay, 50 basis points more than if I go to a weekly regular operation. It is just very basic, thinking about reasonable spreads to provide some incentives, and nothing fancy, I would say, which gives more power in any sense.
And people also talk about helicopter money. Is this also a use case for a CBDC? Let's say the government wants to to send everyone a check like they did in the States. Do you think this currency can also be used for that?
I mean, it was nothing discussed, I don't think it's in the mind of anyone in the governing council or amongst us, technical people working on it. But you're right, it's mentioned in the literature as one justification for CBDC. And in the US, if I heard it correctly, there was even a legislative approach at some stage arguing this point. But I would say no, I mean, it's not a relevant consideration. If the government believes that it's right, to give checks to people, let's find one way or the other to distribute that money. And if we have one day CBDC and it facilitates its distribution, fine.
How do you see cryptocurrencies? What's your personal view on the competition of money? So you have private currencies, you have the ECB, digital euro in the future. How do you see this this playing field?
Yeah. I mean, you started from cryptocurrencies, and there, people have Bitcoin in mind, or that was,
for example,
was a topic, no? And that's something very special, no, because it's a kind of digital commodity with its laws on its own. It's not a financial liability. It's very volatile. Still, some people may just like it also for paying. If there are some service provider like PayPal now, I think, offering in the US that you can hold Bitcoin, and if they offer, easy conversion services at the point of sale, people feel, I'm paying with Bitcoin and I like it. I mean, people, what doesn't challenge financial stability and doesn't harm anyone, the regulator should not prevent it from happening. If it creates some risk, okay, let's look at it. But in principle, I would say let people, do what they want to do, even if from an economic perspective it's not so obvious, to do it. And so that's, I would say, crypto assets in the narrow sense, Bitcoin. Then, came the stablecoin debate, and stablecoins were defined in a somewhat strange way as a sort of crypto asset, but in fact they are closer to e-money. If you now look at the DM proposal, this is something not so different from e-money, for which a regulatory framework exists, and e-money is not so different from a bank. I mean, it's a lighter regulatory framework because it's a more narrow thing. So again,
stablecoin is not so innovative in that sense, but of course, crypto
exactly.
assets. Let's say if crypto assets become more adopted and people would freely and voluntarily decide to use Bitcoin over the euro, would you be happy with that outcome? Of course, that would mean that the ECB would either play a smaller role or maybe even not exist in the faraway future. Would you be, from an academical point of view or maybe from a personal point of view, would you be fine with that, or is that something that you would be against?
I mean, as a central banker, you would say, no, this is not a good idea, because it's not a suitable means of payment. It's not stable in terms of purchasing power. So why would you? I mean, it's not money, It's like.
But if the market thinks it's money, and the market and the price stabilizes, or let's say that's the outcome, would that be okay with you? Or?
Well, I mean, it's just in a certain way a return to, you could say, a privately organized gold standard. And, centuries of history have brought us away from that. And I think paper money performed pretty well. There was, let's say, when convertibility was given up in the 1970s, there was a period of high inflation. But after 1982, if anything, the trend went downwards. And so, I mean, my sense is that the volatility of commodity prices that, led people somehow to go away from a mechanical gold standard still applies. And I would say for Bitcoin, it applies even more. If you look at the price volatility, it's pretty extreme. So why would that make sense to have this as a universal means of payment?
Final
I don't
question,
believe
because I know we're running out of time, and I've already consumed a lot of your time. What is the timeline for this project? Because there was a market consultation, and that was finished recently. So what's next?
I mean, the report we published in October was saying that mid of 2021, the Governing Council would decide on a project, whether to launch a project. And a project means, you spend money, you prepare, you specify user requirements, functional specification, then you enter a development phase where you do the IT stuff, and then you are ready to issue. So that whether to launch such a thing and spend the money would be decided in mid of this year, but it's independent of the decision itself to issue. That could be taken, at any time in principle. But for that one, indeed, I mean, for both the project, the functional specification, and for a decision, a number of things are still being studied. So functional requirements should, be inspired by the public consultation and by more conceptual work on financial stability and monetary policy issues, which we are also conducting now. And then, then on the basis of this work we are doing now, and also some experimentation work to give us a better feeling of technical options, then this decision of a project can be taken.